stocks sold off today, especially ones that had more than 50% gains last year. So Facebook, Amazon, Netflix, all down more than 5% in today's session. SoftTech Venture Capital founder, managing partner Jeff Clavier is with me now. Jeff, it's great to see you.
It's good to be back.
When you see the NASDAQ down more than 3%, when you looked at LinkedIn, which was a big tech darling for many years, down something like 45%, what do you think of the tech environment right now?
So there's been a lot of nervousness in the market. We know that since the beginning of the year, and there's been sort of expectations that were priced in terms of continued growth, and they didn't deliver based on how they said 2016 would shape out for them.
So, Jeff, you invest at the very beginning, and then you help a little bit as the company grows. Does this change, when you see big drops like this, does this change the way that you're investing now?
No, not at our stage. We still do roughly 15 investments per year, and we'll continue doing so in 2016. I think the impact we'll see is how downstream investors investing behind us, Series A, Series B, certainly growth rounds, will just change in terms of valuations and adapt to market realities, because there's no way you can have a disconnect between public market comps, which have clearly fallen down a lot this year, and what was paid for unicorns in the private market.
You have invested in some, well, numerous hot stocks, some of which are still private, some of which are still public. Which public one are you most proud of? That you saw early, you got in early?
I'm still very proud of what Fitbit has done. Obviously, it's down 50% this year, but I think that it's actually a company which makes the world a better place because it helps people get in shape. And I think that hopefully the market will understand that, you know, the Apple Watch won't kill it, that all those competitors won't kill them. They're still sort of in the leading position. And the new lineup of products is actually pretty exciting. The market doesn't like it, but, you know, at CES, they still had 17 awards of Best in Show.
There's new design. It looks good.
Fashion focused.
With a company, though, such as Yahoo clearly on the ropes, do you get anxious that there are fewer potential buyers for any of the companies that you might be investing in?
So, you know, it's actually pretty unusual to see those valuations sort of coming down, which actually are going to get the buyers back to the table of negotiating with hot companies' potential buyouts. Because over the last couple of years, the expectations were so high that the M&A market was actually pretty tepid. With, you know, all those valuations sort of coming down, I've heard numerous sort of corp dev people saying, okay, well, now that the market is back on track, let's have a discussion.
That's the good start of all things. Jeff Clavier, thank you so much. Joining me there, partner at SoftTech VC.